So when considering tax on property or property tax, or known as the levy of a city or town, we must consider that the tax is regressive in nature, meaning that it impacts lower income families greater than it does higher income families because again, their properties, whether it is a lower value property at let's say 350,000 or a higher income property of a million plus, they're taxed at the same rate. So those tax rates impacts the lower income earners at a greater rate than the higher income earners or those families. But one thing we could consider to kind of alleviate this is that you only get taxed on what you actually own or the equity in your house. So if we tax the equity, that would mean because a larger portion of the lower income families own a portion of the house and not the house outright. So if they're taxed on the equity, that means they're going to be taxed at a lower portion of their income will be affected by the tax rate. So that would be a better option than taxing what the property value is worth. So and tax the equity instead of the overall value of the property. That's one thing to consider. And this is something that I've just learned in my New England Economic Environment course at UMass Boston. So we've been talking about this, and it's really brought up a lot of stuff, and it's really cool discussions that we're having. Because again, you know, we just kind of accept those taxes as is, and there's stuff that we can do about it. We can talk to our cities and towns and kind of advocate for changes in policy to better serve the people of the city or town. So I hope that helps, and I hope this is a bit informative. Please like and subscribe if you like this content, and share. Take care. Bye.